Welcome back to Cryptolytics, giving you a fresh take on crypto analytics. Today I'm going to do a quick update on the market. I haven't done one of these in a while, so I figure it's probably about time, and I'm going to try and wrap it up as fast as I can. So let's get into it. Here I have a chart that I showed back in November, just after the FTX collapse of all times, where I said we're potentially at a bottom if this happens. And here it is here. This was the bullish divergence on the undervalued zone down the bottom here. The other thing I want to quickly point out is the bear market estimated duration, which is based on the amount of time the last bear market went for, which was back in 2018. And look exactly, if you see here, it's measured from the top, and then the FTX collapse was the end of that. So I find that pretty interesting. Another thing I've covered in previous videos is the pi cycle bottom. We are officially above that level, so you could still say that that picked a bottom. At least it's pretty close to the bottom of the market. Another thing to bring your attention to I have is the logarithmic regression band, which if you zoom out looks like this. So it goes all the way back to the beginning of time, and these individual lines here are all Fibonacci based lines within that. As you can see, we've been testing this particular band. This band between here and the bottom is like an accumulation zone for Bitcoin, and we're basically in that still right now. So if you're looking at long-term buying and holding, it's still a good time for that. Next chart, I'm going to show another logarithmic regression chart, but this one also with the weekly smooth moving averages. These are manually drawn logarithmic lines. I drew them quite a while ago. I think it was, I'm going to say July last year. And another thing that I measured was this particular bounce here, which is a Elliott wave based correction. So it goes from the top here down to test the 200 period smooth moving average on the weekly, back up to here, and then it literally touched this level down the bottom and tested this log regression line on multiple occasions before recovering back from going back below the 200 period smooth moving average. Something I've covered in previous videos is that we've never ever gone below the 200 period smooth moving average except for this year. So we had a touch here during the pandemic crash, another touch in August 2015, and we also got very close to it in 2015, but it didn't exist anywhere prior to 2013. So it kind of puts into perspective just how aggressive the sell-off has been this time around. Another perspective on how aggressive the sell-off has been this cycle is the Fibonacci lines measured from the bottom of the last cycle to the top of the current cycle, and we went to the 0.5 line on the Fibonacci, whereas previously we only went to the 0.382, which is exactly where we are right now, or just a little bit above it. Looking at the smooth moving averages on the weekly, we can see price has crept back above the 21 smooth moving average and is currently contesting with the 100, which is the purple line right here. The next one we're looking at is 27,500, which is the 50. Something interesting worth mentioning is that the DXY is actually in a very small uptrend if you look at the 4 hour. So I've got here a linear regression on here, which just automatically plots, and it's plotted an upwards trajectory. However, on the daily, which looks like a bit of a mess, we can see it's trying to plot down. Just so you know, these two red bands are the 200 period EMA and 200 period SMA. As we all know by now, strength in the DXY is weakness in risk assets like Bitcoin. We can see at least we have a bullish divergence on here. So that is lower low here on price, however higher high on RSI. Last time that happened, we did get a small relief rally in the DXY. So we'll have to see what happens there. We have banks in Europe going through their own set of issues, so there is a chance that money will just be flowing to the US dollar, but we'll have to see, because the Bitcoin narrative as an alternative to banks seems to be kind of playing out at the moment, so we'll definitely have to see how that goes. An indicator I've used in the past for looking at where we are in the cycle is the BB buy and sell. I've done videos on this in the past as a trading strategy indicator, but I've abandoned it as such and now using it simply for looking and seeing if we are in the start of a bull or a bear market. Roughly, it does chop sideways sometimes, so keep that in mind. This is how I've had it before when showing this. Found this extra EMA modifier for the Bollinger Band, which is another one that I'm looking at, and it actually has not triggered a buy yet. However, if we turn that off, then we are in a buy. So this one's, I guess, a grain of salt. Last time we got the green candle on the 6th of May 2019. We did get a pretty decent rally after that before getting a doji and a few aggressive hairy candles on the weekly, and then basically going sideways for a while, which there's a good chance we'll do again. Perhaps we'll get another one of these from some other black swan, and yes, that is the pandemic crash in 2020. I'm certainly looking at this indicator at the moment and waiting for a buy, at least on the new modified version, which uses the MA modifier, which looks like this currently, but I'm sure it's not that far from breaking out. Another thing worth mentioning is we had our TDSS9 buy down the bottom here, a bullish 3-line strike right here. So that means where the candles go 1, 2, 3 candles to the downside and then one engulfing, and then a buy on the stochastic. We haven't got a TDSS9 sell just as of yet, and we do have a bullish engulfing candle currently forming. Another thing worth mentioning is on the stochastic, we are getting a crossover, but if we get a small Bitcoin run here up a little bit, then those will separate back up as Bitcoin continues its way to the top of the range, where I'm guessing it could potentially cross once again, bearing in mind that it does get stuck up to there sometime as price just runs. So there's a potential that that could happen again. Another thing worth noting is we are getting a series of bearish divergences. If this does turn around, it would be the third in a row, which could be the precursor to a much larger move to the downside, but we'll definitely have to see how that plays out. That's all for this video, just a quick market update. Hopefully you found this interesting, hopefully you learned something from it. If you did, please leave it a like and subscribe if you want more content like this, and I'll see you in the next one. Keep safe out there. This is Cryptolytics signing out. Have a good one.